Good evening, fellow investors. As requested, here are the reminders that ADM is now below 50, as I said, and let's recheck what's going on, as many of you have asked. And there is also Howdy from Texas, so I have to make a video. And here, Woody wants to consider a large position in ADM, and especially now. With the price tanking today another 10%, going to 50, around 50 as I'm filming this, let's check what's going on. Again, they have not figured out their accounting issues, but we'll discuss that too, because you have to read the whole news, not just the headline. And as it was the case back then, in January of this year, when we discussed it, how the accounting issues shouldn't be a long-term issue, and also after that accounting the stock reverted a little bit, but this decline now is not due to accounting, it is due to the food price cycle, let's say, weakening. As I said 4 weeks ago, nothing wrong with ADM, and I keep saying that. You just have to read the preliminary third quarter results. Okay, net earnings, there are some impairments as always, but if you look at them, adjusted 530 million, it will go up and down with the food cycle, a little bit lower on the EPS, $1 per share, expected Wall Street 125, but keep in mind for the accountant, restatement of previously filled fiscal year 2023 10K, thank you, not expected to materially impact results on a consolidated basis, because the accounting issues were about intercompany transactions. So it's not something stellar, and that was with the newly acquired, what was it, nutrition company. Look at the cash flows from operations year to date, 2.5 billion cash flows from operations. So they will make likely 3 billion in mixed, challenging quarter for the business, as the CEO said. Carbohydrates were strong results, agricultural services and oilseeds nutrition below expectations. But that is the food cycle, and that's how you have to look at ADM from an investment perspective. So there is the food cycle. When the company was smaller, a lot of time has passed, investments and food prices were low, earnings per share were around $2-3. Then we had the food inflation boom, and now that is reverting, and now we will likely go to $4 in the next downturn, but also below Wall Street consensus, but Wall Street always adjusts for the temporary, and it might be 4, it might be even 3 in the next year as earnings per share, and you will see now. However, the dividend is there, now approaching 4% as I'm filming this, and therefore I have to move Archer Daniels Midland's from an 8% yield, as it is now, lower to a 10% on our quadrant. Food, thus low long-term business risk. We'll discuss the difference between investing in businesses over the long term and the stock price in a moment, because again, a great comment, look at ADM, great pick as always, and I'm not here to pick stocks, I'm here to build portfolios over decades, and that's a big difference there, because we already discussed the accounting change here, and I said that it looks better here at 50 than at 70. But when it comes to stock prices, this dip here is because of the following. The US Department of Agriculture, US food prices are expected to continue to decelerate in 2024, and I've read some are also in 2025. If we look at corn prices, 2023, and now we are 50% down, and this is what impacts current ADM earnings. So down cycle for food prices. And yes, if that continues, and will likely possibly continue for a year, 2 years, we might have earnings per share of 3, 4, and if we hit 3, the stock will go to 40. No question about that. But when it comes to investing, in the short run, The market is a voting machine, in the long run is a weighing machine, and you have to decide whether you're voting when investing or weighing, because the main reason people sell a stock is going lower. That's the main reason for today's stock drop. The main reason people buy a stock because they think it's going higher. Just look at ADM from 2020 to 2022. It went from 30 to 100 or 90. So it went 3x in 2022. Why? Because people thought that ADM will make so much money for the long term. No, because they thought that it will go higher and higher on short-term earnings expectations, and it was beating Wall Street expectations. Now as the cycle reverts, we are lower and people are selling because you're crazy to buy a stock that goes down. However, there was this selling, and as I'm filming this, the stock is already up at 51 and likely already adjusting for the panic and selling just because it is going down. All in all, ADM looks good. If you want to own that in a portfolio, have a strategy. If it goes lower, you increase the position, you reinvest the strong dividend, and in 5-10 years you have a great dividend player because it has been 50 years of consecutive dividend increases. You see, whether you are someone that looks for stock picks, take a hike. There are 900 other YouTube channels that give stock picks, or if you want to build a long-term portfolio like here, our How Different for Texas, then you're very welcome to stay on this channel. Thanks for watching. I'll see you in the next video.